That won't be good. Probably won't be good. That number. Good for the market. Okay. All right, good morning. Here we go. So it's getting interesting here, meaning the pattern of the retest of the lows, maybe it still plays out, but so far the markets are holding up pretty well here. You know, buyers aren't running away so quickly. Yeah, let's show you some charts rather than Dan and I. And the reason I'm saying that, you know, here's the wide range bar coming off of the lows there, right? Not unusual for coming after a big drop like that, igniting bar off of the low. So here, where it's going sideways, we're looking, let's see if it's going to come down. And maybe it does yet. So you see all the lows here, they're relatively equal. And now yesterday being a green bar. Well, below that, it's going to waterfall down to here because it's been trying so long for multiple days here to hold up. So we'll see what actually happens. But on the hourly chart, of course, one of the reasons why we look at multiple time frames is to get a view from a long-term perspective, the weekly, an intermediate-term perspective, the daily, and a short-term perspective, the hourly. And then we can trade from the smaller time frames based on our bias. So we had this little double bottom here that occurred a few hours ago, and the pop up, and it came all of a sudden right back down again. And now it's holding up. And if it can clear this area, well, that's a long. Looking for it to push up toward this prior high area at the top of the base here, which maybe this is kind of like whatever word you want to call it, a pendant, a flag, what have you. You know, where these lows are a little lower and you know, the push up. It's not your textbook, of course, but I mean, you know, we started to talk about a measured move here and it back down and it's consolidating. So again, it'll all depend on where it ends at the end of the day. So even if it gets through here and we go long the futures, you know, or if you want to use spiders, there's nothing to say it won't be a topping tail at the end of the day. So don't get caught up in what a daily bar looks like intraday because it can change dramatically. One of the things we talked about in the room yesterday was, well, as we get later in the day, past 3 o'clock and of course 3:30, the bar is pretty much going to end about where it is. And you're not going to have a miracle turnaround day where it's down at the low and all of a sudden it rockets up to the high, you know, if it was, you know, a wider range on the day. So we continue to see, you know, which way is it going to go. So SPX levels below 2,400. I'll have to look at the SPX to see how it compares to the futures, but yet down below here. So that's what we talked about yesterday. Now, one thing to consider here with our 0-day to expiration trades. Yeah, this is significant support intraday. It's been retested twice. We've got this double bottom here. And this pattern says it's going higher, right? Of course, it's got to clear these highs, but we look for it to go higher with this pattern. If for any reason it fails, right? No one knows if it's going to, but if it gets below here, 2,400 might not be so difficult to get to. So just like every other day, you know, you have to assess what is, right, what we're looking at right now, and then assess what actually happens. So getting above here should make 2,400 a no-brainer, that it's not going to go down there, but we'll continue to monitor. Up above 2640, 2625, you're saying 26.25 I wouldn't do. Because if we were to get, really get going here, and Alex mentioned this ISM report, if that's all viewed to be a positive, 26.25 could be doable today. So I would want to get above 26.40. And so related to SPX, wherever that lines up, maybe so. 26.25. Yeah. So looking at SPX, those are the numbers. 26 going below 2,400. Well, if it can start perking up here, if it goes up first, well, then you go for the put spread. And so we'll see what happens. If it goes down, then the call spread. All right. And Qs, we've seen the same story, pop up into resistance, and it's just chopping around, but it's good price action, right? It came all the way back down again and recovered for the most part. So here's the idea or concept of wide range bar igniting, and the candle bodies are staying in the upper half. Now we'll see it, at 9:30. Hey, everybody's ready to press the button. We can get through here. That's got to be a go with. And it's consolidating at resistance. We like that kind of price action. And ideally, if we can clear here, if the NQs can clear this area, well, it should stay. It should stay above here, right? Because once it clears here, we don't want it going back down to major support. Now we want it to push up through here. And now this daily trading range, right? The heavy lifting will become once it gets here to try and get through that. But this is going to go a long way if this market can go up toward this level today and actually hang on to it into the close, to suggesting the markets can go higher rather than the scenario of retesting the low. So it's in development here, and it's, as you can see, day to day, red, green, red, topping tail, red, green. So, this is what we have. Don't fight it. It's fine for intraday trading, but, what's going on here makes swing trading difficult, if not impossible. So why bother until things get much clearer? The Dow, same story. You can clear here, go with, pick the one you like. So one of the things that we'll do at the open as things develop, as they start to go, we've got voids across the board here up above, but which ones will be showing relative strength or weakness, and so we'll assess it and we'll do it. So the Russell was able to stabilize early, but it's been relatively weak, and so now there's the opposite of a green bar. When I said the green bar is staying in the upper half, the other chart that we looked at on the hourly. Well, here we've got a red bar where the consolidation is staying down below, and it's a wide range red bar. So we really want to see if those other markets are going to perk up and move higher. We want to see the Russell start to move up. But whereas the Russell was showing some relative strength, if this could have got going higher, the Russell would have been the go-to. At this point, going with the S&Ps looks a lot more attractive if it can clear here, or the NQs, which have been stronger. So as we always do, we'll assess it as it develops. Oil is getting that bounce, right? President's talking to Putin, right? Hey, can you stop with the nonsense over there with the Saudis, and after it's been crushed? So, that's coming up there, and it coming up toward some resistance. So, as we say, maybe some of the heavy lifting begins here, as where sellers want to take some off the table, or even give it a shot to short it to see, is it really, they're really going to get this to push. But it's a good start. Came down. There's a retest pattern. So for those of you that are new to looking at price patterns, when we say a W type of a bottom or retest pattern, this is what we're talking about. So when we were looking at the S&P, And originally when it came up to this area, it was saying, hey, we want to get the retest pattern. Well, so far that's not happening. And one of the concepts that we teach Master Trader is called bar by bar analysis. And bar by bar analysis, the concept there is to force you to recognize that something is changing, right? So my bias is, hey, retest pattern. Now I see red bars being ignored, coming back, after a little dip. Notice how this bar took out the lows there and it recovered. And now if this can move up into here and this little bar become a green bar, well, bar by bar analysis says, hey, Greg, that retest pattern idea doesn't look like it's going to play out. Maybe we're going to have a measured move kind of scenario here with a nice little consolidation versus, sometimes the measured moves happen on like 3 bars. Right? Dan calls this kind of a bear sandwich, with the red bar being the bear meat, with bulls on either side. But and that could have resulted in a move up. So the markets have been, we're not so sure about this low. What the hell's with this virus? What's happening in the economy? So a lot, pictures like this communicate uncertainty. That's what we recognize when we see those overlapping bars. Bonds are up here a bit, but up in resistance, holding up pretty well. They'd have to get through this area. And that might not be good for the markets if the bonds start to rally like that, because why people want to go buy bonds if equities are going to make a nice big move. Gold continues to chop around. Silver holding up relatively well, right? There was the sell setup and looking like it could go higher. And we always look at the transports. And so they recovered yesterday as well. And so I'm going into today with a long bias based on these charts. If it can get through here, and if for any reason we're down here at 10 o'clock, we're into a trading range and I'm not so sure. And of course, we're always looking at individual stocks that are on their own page showing relative strength or weakness to go with. You can see on maybe the 15-minute how clear just the range bound futures are here for the moment. So down below here, sell it short. Up below here, go long. That being said, I guess a little quicker, but all yours, man. There's lots of stocks that are moving here. And let's see what the stocks look like.
All right, good morning. Yeah, I see oil popping again. I mentioned that earlier. I want to scan the whole sector. Greg looked at oil, but yeah, look at that. It's a double bottom. And that's just telling Greg, I think MT Live, we've been trying to focus on very timely subjects here during this bear market crash. And I think a very logical one, even though we talked about double bottoms in last Wednesday's MT Live, I think now drilling down to that exact subject. This is one, OIH. USO is not one. XLE, XOP. No. Spiders, but like you said, if we don't get it, that's okay. We're analyzing other information here to see where we're going to get a turn. We only have a few opens here in the weekly options trader. Zoom call spread covered half yesterday at 70% of max profit. Microsoft, it's been holding on there. We have a 150 put spread, expires today. So hopefully it looks good. Now Tesla, I gave a bear call credit spread yesterday under, all right, I'll look at Oxy, under Wednesday's low, and it triggered. So I always give things as a limit. I say, hey, it's trading at $1.01 now. Do a limit of 90 cents, but it fell so rapidly that I got a few emails saying, hey, we never got filled, Gibby. And I responded because we were shorting the 530, 545 call spread. And I responded that, okay, I'm sorry. I assumed it did, but I always like to get confirmation from people if I don't trade it myself. I was away from my desk when it hit, so I did not take it myself, but I said, good, if you're not in it, don't take it. But big gap here, 530 pre-market. Let's see, like any gapper, gapping, you know, it's a bullish gap, but it's a big gap. So for now, if you're in it, we'll use a 30-minute high. Nice, Clint. Oh, good for you. Yeah, I had them cover half yesterday. And, you know, Tesla has more gap risk than the others. So I can't fault anybody for you know, booking that nice money yesterday. Good job. So that's it on the weekly. Let's take a look at the swing and options trader. Amazon, we're long a half lot. Clorox, we sold a way out of the money 165 naked put down here. CVS covered call. That expires today, so I'll be looking to sell another call for next week. Diamond, same. We have a covered call. I'm sorry, we have a covered put. Covered put. I had the wrong code in here. There, I just changed it. So covered put is we're short stock. And when it started showing strength, I sold it out of the money put, and that improves our cost basis. IAC, we're short stock. And I'll also be looking to leg into a covered put on that. Lulu, we did leg into a covered put. Lyft, we're short stock. We've covered half at a $2 gain. Ross, call spread for next week. Snap, short stock. And this looks like that's a beautiful ad under the lows here. Beautiful ad. You got your price void. You got your breakout failure. You got a lot of overhead resistance. That's beautiful. Beautiful ad. VXX. We are short this. And if the market, like let's say, you know, we get through the ISM number and the market's starting to act bullish, then I will leg into a covered put on this one also to improve cost basis. That's it on the opens. Some gappers here. Livgo, I saw pop in pre-market. So 28 bucks. It's gapping over yesterday's red bar. Had a deep retracement and a pullback. So that looks fantastic. I have it here in the bottom right screen. So that looks great as a long. Couple news and earnings stocks here. Disney, they're going to furlough a bunch of people. Now, this whole thing of furloughing and, you know, withdrawing forward guidance, we know that's coming. It's normal. So they're furloughing, but no pattern. So you're going SMCI. I'm not sure if you had earnings or what. I forget why I wrote you down. Natty. Did I lose my pre-market? No. So these, I don't know where these are gapping to. Cree. You know, I don't know if it was earnings or just withdrawing guidance on that one. A little gap down, but no pattern. XOG, I think had earnings. A little penny stock. I don't trade those. We had a beautiful long yesterday in Fang. Made 26% return in an hour, and I noticed this is up again. Yeah, let's focus on oil again today. I had looked at a bunch of them, and they closed with topping tails. But now today's gap up, maybe 30-minute high. IQV is kind of flat, no pattern. Monroe, they were withdrawing guidance, no pattern. Play had earnings, and this I was looking for a retest. This was one where we did a 1, 2, 3 off the low and made 100% return in that little bear market bounce. This obviously in the leisure space, Dave and Buster's. So this looks interesting. That's going on my long list. You know, these things that are coming in, we're just, I use the term, we're looking for the turn. In the turn, yeah, restaurant and, you know, they have the games, so it's restaurant leisure. We're looking for a potent turn, and I don't have one yet, but maybe today with the gap on earnings is it. I've been watching the whole, you know, look, here's another perfect example. Airlines, there's no turn, none. UAL, this one, the way it's gapping up a little bit and going sideways, this is a day trade long possibility. 15 or 30-minute high. I don't think I'm going to do anything till we get through this ISM number. Love, JetBlue, Delta, AOK, Save. They're all still a mess. Cruise lines, RCL, no turn. See, this was an attempted turn, this green bar. That was an attempt at the gap fill. And the day wasn't over, closed with a topping tail, and it's still not a potent turn. A potent turn is a big old green bar, a reversal bar, tail, gap down reversal, 180 reversal that jumps out at you. So that still is not ready. Norwegian, nope, that's weaker. CCL's been the bigger dog. Look at that, new lows yesterday. And CCL owns, what's it called, Gustavo? Those two Corona ships docked here in Lauderdale, where I live. My buddy who lives on the port condo sent me a video as it was coming in. It's like, there's the Rotterdam. So, yeah, we got two Corona-filled ships here in Lauderdale. And so anyway, Carnival owns them. They've been weaker. Keeping an eye on casino stocks. Caesar, another one who came out and said they're furloughing. And this is not a double bottom, obviously, but this is a potent reversal from a climactic buy setup. Right there, you got a beautiful 2-bar reversal. And notice that this tail, if you drop down to an hourly chart, major support. So you got 3 levels of major support here and a 2-bar reversal. That was very tradable, very tradable. I am scratching my head here of why we weren't in it. I guess because I wasn't watching it, but that was a very tradable pattern. Tilray, marijuana, we're looking for the turn. Chewy had earnings, gap down. Now it looks pretty flat. It's no pattern. We'll come back to you. Cake had earnings. This one has been showing relative weakness. Broke down. No interest. Clorox. As I mentioned, we have the short put, but also want to keep an eye on it for a possible long. Greg's Coffee Shop here in Payne yesterday. Yeah, they were cooking the books.
I don't think you should call it my coffee shop anymore, Dan.
Yeah, you're right, because I don't want exactly. I don't want to. Only when it was ripping to the upside was at your coffee shop. All right, XOM. Let's keep this on our list. Halliburton, APT, little Corona stock, Oxy. There's a double bottom. Double bottom. Devon, double bottom. Look, boom, retest, price void. I just didn't like yesterday's topping tail. But, you know, the gap up and 30-minute high, as I said, Noble, it's actually stronger than a double bottom. Why? Because it didn't retrace. It didn't retrace. It moved up and it's going sideways. So buyers stepped up earlier than a retest. Zoom we looked at airlines, we looked at Chewy, we looked at C's, Roku. It still looks like a short under yesterday's low. Intel, big mess. Let's look at FANG stocks, Apple, Amazon, Google. Netflix has been the strongest of the group. And Tesla we looked at. All right, good. It's coming in. You know, I read in the paper, it said, yeah, they did their, the best quarterly deliveries. But then it said, hey, we're giving no guidance on the future. So I actually was like, wow, you're gapping up this much? Oh, Greg, I forgot to look at Oxy. Hey, Hermano from Germany. What are you doing in Germany? I thought you were in Chile. What's your take on Tesla in the next what? In the next hour, week, or what? All right, is Guerra is asking about Oxy oil stock. Yeah, 30-minute high, looks good. Yeah, you know, that's a double bottom. You got some tails there, which are resistance on an hourly, but I like the gap up to yesterday's high. So I would say 30-minute high, 30-minute high on Oxy. Like I said, maybe some of these others are stronger. No, it wasn't Devon. Like this one, I think I like this one better just for the reason I already talked about, that it went sideways here. Let me put that in a window. So Tesla, the next days, weeks, and it's a bullish gap. So it's going to be in a trading range with yesterday's low being a very powerful support. Let's look on an hourly. So, you know, that's a very deep bullish gap to resistance. So if it can hold, you know, 40% retracement, give us a double bottom, then that actually, we might even consider a put spread. But as long as the market stays strong and this holds 50% of its gap, then I think it has an upside bias. That it has to burn off some of this resistance, maybe go sideways for a couple of days. But it's a bullish gap. I mean, we were all out bearish yesterday afternoon. I was even saying that you know, back to the hourly again. I was saying first target this gap fill because that's 3 days of very nice action. But with the daily falling like that, with all of these days of resistance, I was saying I wouldn't be surprised if it overshot that gap fill. 0 DT gang on Tesla. You know the drill. Totally, it's going to depend on how it sets up intraday. Right now, it's falling too fast. It's already $32 off the high. But yeah, you know me. I'll consider anything. I'll consider anything with a compelling setup. But you know how we trade gaps. It has to be a compelling gap with a price void on the daily. So that's step 1. Step 2, intraday setup. It's that simple, preferably with the broader market on our side. Alex, did you hack my computer and turn off that bell? Because I didn't hear the bell go off. I think he did. Typo. All right, spiders, we're just in a waiting game. Which is good because I really don't want to trade ahead of